Mm-hmm. Okay. 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 I'll try to do my best. Hmm. Okay. Hello. I lost you. Okay. Mhm. Okay. So my name is Jan Alperovych. I'm right now located in Lyon, in France, and I'm originally from Ukraine, uh, through Belgium into France. And my motivation for, I suppose, for this paper was to study the implication. Motivation of the paper, you mean? Of the paper are basically twofold because we wanted to study the implications of government venture capital programs on the recipients of that kind of financing in Belgium. Hello? Yeah. Okay, because I have signs that connection problems there. So shall I do it again? Okay. So the motivation of the paper is really to study the implications of government venture capital programs, which are including. What we mean by implications is basically the impact of that kind of financing on performance of companies that receive this funding. Hello? Right, yeah, now I get you. Uh, yeah. We were at that point. I was in Belgium, Mike also as well. We knew very well the industry, well the outlook. Europe here we have access to financial accounts, to all that sort of information of private companies. So it's absolutely not a problem to get the data. The only problem is to collect, of course, the list, the data set of firms that receive that kind of venture capital financing. And this, we had to do it manually. We had to search through newspapers, through reports, especially through the reports by government venture capital funds. We had to contact people that are involved in the industry to confirm some deals, and this is basically how we went to begin with. We were looking, well, when we started this research project, we first, of course, looked through what has been done. And we found out that most of the papers that treat the question of performance of venture capital investments, especially performance of the firms that receive venture capital, well, there are two problems here. Well, we see it as two problems. The first one is that virtually all of those papers, they look at the output measure, like sales or growth or innovation. Whatever you put into the output measure, it's only this. And the second problem is that most of the literature treats venture capital as one homogeneous type of investor, which we know is not really the case. There are very many different kinds of investors. Yeah, so we know that there are many different types of investors, and we wanted actually to see what is there a difference between and public venture capital, well, public, we call it government venture capital, on the performance of targets on one hand, and on the other hand, we wanted to understand the link between the transformation process of inputs into outputs. So we want really to study the productivity and not just one output, as is done in many other studies. So to do so, we basically first collected the data on private and public venture capital deals in Belgium. Then we recovered the full set of financial accounts of those companies for a period of since 1998 until 2007. And then we estimated using the data envelopment analysis. So I'm not going to get into details before the output to the input of all those companies, and then just compared them, keeping in mind the distinction between the private and the government venture capital. We basically find, we find several very interesting parts. Our first finding is that in Belgium, for that period on the study, if we look only at we look at firms that have predicted more. We actually find several interesting points. The first is that if we look only at venture capital, I mean, it improves the improvements in the productivity compared to the government venture capitals, and in particular, we found that particular funds that are culprits of this, let's say, bad performance, poor performance. Now, if we look at more general picture, including firms that have not received venture capital at all, we find that actually private venture capital in Belgium in that period, during that period, is not really better than no venture capital at all in terms of productivity. I mean, well, productivity of the firms that receive venture capital. However, government venture capital, it's not only not fostering improvements in productivity of targets, but it's actually, in targets, and this is something we did not expect. We expected them, to improve a little bit, not that much, as others, but we didn't expect them to actually lose in productivity over the samples or over the period of study. Hmm. Uh, yeah, well, it's very heterogeneous. There are lots of studies on this matter. Uh, I would I would tend to say it's all depends on the design of the program. We do not really do it in the paper, but there are other papers that we've looked into, and these programs are not structured in this way. Hmm. Hmm. Well, we think there are implications for both. For governments, for Belgium, their programs are not warranted. We just signal them that what they do, what the funds they've put in place in Belgium are doing, is actually contrary to the initial objective, because the initial objective was, of course, to support young companies to achieve all those positive effects of private venture capital, which is very well known, like job creation, innovation, economic development. Well, any kind of positive effect you could imagine. So these were the stated objectives, and we don't think that reductions in productivity help companies achieve that. That's implications for government. So we should probably look more closely at the design of those programs, how they function, how they select investments. Government venture capital, it's not just yes or no answer. For companies now, the implication is very simple. If I may say so. The implication is that if you want to, develop to grow, it's not with government venture capital in Belgium that you could do it. So for companies, whenever you consider actually opening your equity to outside investors, it is probably better to consider other sources of financing, like private venture capital banks, or I don't know, business angel family offices, rather than government venture capital funds. Hmm. Yes, yeah, Israel is actually one of the best examples of how the government should structure its venture because of the good design. Mhm. I think it's both actually. On one hand, they cannot, well, government funds. I think they cannot select good companies, or even if they manage to select a good company, they have no experience, no competences, no human capital to provide advice and coaching to those companies. Uh, there is another a whole set of reasons, political reasons, especially when you get to funds which operate more regionally rather than on a national scale. You've got political distortions kicking in, which also, creates all sorts of basically agency, I would say, type of conflicts uh, at the level of not necessarily between the investors and the recipients of funds, but rather between the government and the general public and the general interests of the economy. So there is this point as well. Now, what exactly it is, whether it is a selection or not, we try to tackle this question in the paper. And extant literature seems to point out that there is, besides controlling for selection, there is still value adding of private venture capital. We did the same in the paper, and unfortunately for government venture capital, even controlling for selection, there is no value added. So are they not selecting good firms? Probably they are. They're not. Are they providing anything to those firms, even if they happen to select good one? No, they're not. Mhm. In France, but we are discussing these issues in France. We do find them, but at the regional level. The France is much bigger country, and there are a lot of well, there used to be one big, very big major player in France, which had its representative of its offices in regions. So if you go to, and that player seems to, learn to have learned somehow the the efficient way of working within the industry, but this seems to be only at the top level of this company. So whenever we talk about the Paris, whenever we talk about, the central structure of that government venture capital firm, let's say, they do it in an efficient way. They collaborate with private venture capital. They set up fund of funds systems. While the more regional you become, the more they go into regions, the more authority they give to regional offices, the more standalone they become. I mean, they start to act like standalone venture capital funds, and that's where the problem starts, because again, we don't think they have experience, competences to do the job of a venture capitalist. Hmm. Hmm. Yeah, probably do it. At least that's what other papers have found, that in this way, the, 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 you could actually achieve both. You could achieve benefits of venture capital and provide financing to create a number of companies, because this is probably what they want. So, well, Thank you very much. And sorry for the internet connection. Mm. Now, well, if we have to reschedule it, I will probably sit in some other place. Maybe I'll do it from home. The internet connection is much better. At least I know. Well, I don't know where they get their internet connections here. I know where I'm getting it from. So thank you, Andrew.